What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champion of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're talking about a little company called Petmed Express. Ticker, appropriately enough, Pets. Now, a few of you are in the chat. Bruno, how you doing? All the way from Portugal, huh? A few of you were in the chat, and I went on a little rant, which is good. You know, I like to rant, especially in the beginning of these videos. I like to get you guys in here. So in the chat room, I did my AT&T rant. So listen to this. Right now, I am doing the hotspot. And the only reason I'm bringing it up is because I'm doing the hotspot off my phone right now. But yesterday, as I was doing my work, I got a little text message saying, hey, you've used 80% of your hotspot allocation. And once you get to 100%, we're going to throttle you, which is fair enough. I get it, you know. Oh, yeah, who let the dogs out? I know, I should have done so much of that. Anyway, no music today because I'm trying to limit. You know, got to limit the bandwidth. Plus, yesterday wasn't really working with the music. So, anyway. So, I know you guys, Jeff, you already heard this. A couple of you guys. So, AT&T, right? I'm like, am I going to do the amp? There we go. AT&T, okay? So, I called them on Monday because my internet had been out since Sunday. So, the guy on the phone, very nice gentleman from probably Jakarta, said, okay, sir, we're going to overnight you a new modem. That's after being on the phone with them, you know, the whole time. Overnight you the modem so you can get it. Because I told him, hey, man, I work from home. You know, I got to get back to work on something quick. Like, no, I'll shoot that over. So he does it. He says, okay, Tuesday. So it doesn't actually go out until Tuesday. Wednesday, it shows up later on in the day on Wednesday. So Thursday morning, which is today, go downstairs to get my package, bring it back up. They tell me, oh, you're just going to have to plug in the modem and it's going to work and blah, 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 blah. So I go ahead and I plug in the modem, get it off and running, and it doesn't work. Internet doesn't work. Now I'm moving tomorrow to Sunrise, Florida. Okay? Why would anybody want to move to Sunrise? I don't know. But that's what I'm doing. So the guy's like, well, I can have a guy, you know, a technician come out. I'm like, bro, I need this to happen like now. He's like, well, a technician can come out. And, you know, this is like 10 o'clock. I'm talking to the guy, right? Because I got to get to work, man. Like, I have to work. Stuff to do. It's like, he'll get there by 12:30. I'm like, bro, you're not understanding. So you're going to have your tech come out at 12:30, and then I'm going to move tomorrow. So he's going to be here so I can have internet for, let's assume that he's the best tech in the history of AT&T. That means it's going to take him 3 hours if he's the greatest technician that AT&T's ever had. Because based on the conversation with this guy, no offense to anybody that works at AT&T, but actually, you know what? No, offense to people who work at AT&T. I'm sorry. No. So, either way, blah. Sorry. So, I don't have my internet. So, I'm going off my T-Mobile hotspot. So, then I'm calling around to find out new internet in my new place. AT&T or Comcast. All right? Now, here's the breakdown. So, speed. No. You know what? No, let's not do speed. Let's do price. Start with price. Price. AT&T, $75 a month. Comcast, $75 a month. Okay. When can it get installed? Installation, AT&T, next, I don't know, Wednesday? Next Wednesday. Comcast, oh, you just come pick up the thing and plug it in and you're good right away. Okay, so tomorrow, right? All right. How much is AT&T going to cost me to... oh, we'll waive the installation, for sir. Oh, okay, thanks. Great. Comcast, yeah, no, there's no installation, dude. You're just plugging in. Okay, good. Here's the kicker. Speed. AT&T said the fastest speed we can offer you is 5. I said 5 what? 500 megabytes? No. 5 gigabytes? No. 5 megabytes. Yo, 5 megabytes? You've got to be kidding me. So I'm like, why would I get this Pilgrim internet? Well, I'm going to have to trade in my car for a covered wagon with wooden wheels. I'm going to have to build a hearth in the middle of my apartment so that I could cook the small game animals that I catch on my hunting runs through the swamp. Comcast has gigabit internet available, but the $75 option is actually the 150 megabytes, right? Which is fine, guys. I don't need the gigabit. While it would have been good, gigabit would have been $1.50, right, for the gigabit, which would have been cool, right? Because I could tell people I got gigabit internet. But it's me, it's my girl, you know, whatever. 5 megabit internet? Are you crazy? Are you crazy? And you got the nerve to try and charge me $75 for 5 gigabit and 5 megabit internet? Does it come with AOL? Do I get AOL for 6 months with that? Why is internet so slow in the United States? Red tape, bureaucracy, lack of no, the U.S. is terrible because they give these people these monopolies. That's why. Protectionism, bunch of BS. They say this is capitalism. Let me tell you, it ain't capitalism out here. No, sir. This is what you get when you get these protectionists. Ugh. Anyway. Whatever. It is what it is. So, anywho. That's my rant. So, if you guys ever... And then this lady's like, oh, do you have AT&T wireless? And I was like, are you serious? Well, AT&T wireless, why would I want AT&T wireless? I'm actually going to tell everybody I can to stay away from AT&T. I'm actually going to tell my friends not to name their children with names that start with the letter A or the letter T. I'm going to avoid AT&T at all costs. Doesn't matter what it is. Like the plague, I'm going to run away. All right, let's get to Petmed Express. Oh, let's get to Petmed Express. So, what do we got here? As always, guys, let's kick things off with the price consensus EPS surprise chart on Zax.com. Here you're going to see why I liked this stock, and I had it in home run. I did. I believe I had it in a home run. Look at this. As always, the black line corresponds to the right y-axis, which is price. The left axis corresponds to these multicolored lines which represent the evolution of our Zax consensus estimates over time. If you don't know why Zax focuses so much on earnings estimates, this should tell you why, okay? Look at how these EPS estimates kind of move. And we're not really like, we're fitting this, but we're not lying about this. We fit the y-axis, we fit the price, and look at what happens. When these estimates go up, the stock goes up, right? The stock goes up. You can really explain long-term movements in stock prices by using the earnings. Now, these are earnings estimates, right? So these look a little far out or whatever, right? But earnings is going to tell you the story. Because the only thing that matters is earnings. The stock's price equals the valuation, right? times the EPS. That's it. No wonder that PE, right, times the EPS, the E's cancel out, and you get the price. Simple math. So we got to look at PEs and say, what's going to justify these PE expansion? What's going to justify PE expansion is going to be EPS growth, right? That growth rate is going to pull it along. But EPS, we can study this and we can see the trends. Trends in prices, trends in PE, kind of all over. But trends in EPS have a tendency to stick around, right? They don't just change on a dime. And we can see this in the earnings estimates. So this shows you why, and these end up being like a mini commercial for Zacks, not because I'm here trying to push this stuff. This is because I have experienced this, and through my years here, I've just learned, and this stuff jumps out at you, and you're just like, wow. So this is really what we should be focusing on, and that's what we do. So that's why also, guys, if you notice, I don't get hung up just on the Zacks rank. I don't get hung up on an individual metric or whatever. I like to look at this sort of, I'm not going to say this is intangible or it's that qualitative, but you can gauge with your eyeballs what's been happening in EPS a lot better than just some numbers can tell you. So here the eyeball test tells me this was a great run-up, but now look, it's stalled out. Why is it stalled out? Well, because these EPS estimates have stopped going through the roof. The roof. There it is. Puns all day today. And have started to lie down. So that's the story. Okay. Let's look at the detailed estimates page. And you'll notice there's Zacks rank number 4, sell. And again, that's not a bunch of us over at Zacks sitting around going, I don't like Petmed Express. This is other analysts out there telling us their feelings, and then we're just aggregating that data. PJ, how you doing? Welcome. They're going to report before the bell on the 23rd. What is that, Monday? Is that Monday? What's today, Tuesday? Well, today's Thursday. Tomorrow's the 20th, right? First, second, 23rd. Yeah. Monday. So you have the rest of the day today, all the trading day tomorrow to figure out if you want to mess around with this bad boy. So when you're looking at a stock like this, obviously Petmed Express, like an online pet medicine ordering thing. The industry peers that they have here, you're not going to have any real competition there. It's going to be something goofy that they throw in this industry. So don't pay too much attention to the industry rank when you're looking at this and sectors. I mean, don't worry so much about that. It's not going to be something that you have to compare to your peers. That works in other instances, but it doesn't work here. Now look at this. So this is why the concern, okay? This isn't EPS, man. This is revenue. Top line stuff. So this is telling you about the overall state of the business, not just the individual company's efficiencies and how they're investing their money. This is the business. You can't lie about these numbers. 3.4% year-over-year growth for the current quarter. 5.89 for next quarter. Current year looks like 648. Next year looks like 423. On the EPS side, this is good. They got some efficiencies here. Year-over-year growth. How'd that pencil get so small? Year-over-year growth, 20%. 16 for the, this is for the quarter. Current quarter, 20.83. Next quarter, 16.67. Current year looks like 20.5. Next year, 7. Why the bearishness? When over the last 60 days, you actually have 2 analysts that have come out and increased their estimates for the current quarter and next quarter. 3 have done so for the current year and 2 for next year, but that's 60 days ago. Overall effect to the Zacks consensus estimate here has gone from 27 to 30 to 29, 26 to 28 for the next quarter, 125 to 141, 142 to 151. So it is moving sort of in a positive direction. So when you look at this and you see, wow, why did it fall off the cliff? Like, what the heck's going on? Well, I mean, this was a $20 stock that was almost a 50. So the stock doubled. Does, what was it, 6% revenue growth justify the stock doubling? You didn't get, oh, I'm sorry, 3.4, yeah, 6.48 for the year. Does that justify that? The market came out and said, no, absolutely not. And that's why the stock sold off, okay? So I know there's going to be what I like to call the trapped bulls out there. And these are the guys that were buying up here, up here, up here, and then on the way down here, and then here, and then here, that are trapped right now in losing positions. Or it ain't what it used to be, right? They might have got it down here, you know. Trapped bulls. So that's the scenario. There's a lot of trapped bulls. The market knows there's some trapped bulls, and they want to hurt them. They want to hurt them. Okay, let's look at the. Let's look at this. More on the revenue side. It's not like this has been a very growthy company. I mean, look at this. 2011 negative. 2012 2.85. Okay, so you canceled that out. That's good. Negative, positive, negative. Look at this. When you look at the actual numbers, and then, yeah, of course, we got a little bit of growth here. Look at from 2012 out to today, out to the future even, what you're projecting. I don't even care about what you're projecting. Let's just look at this. To here. I'm pretty sure that I figured out how this works here. And this growth is just, that's nothing. So in 10 years, look at this. A whopping $58 million more over the course of 10 years. So about $5 million a year over 10 years. When you're making 200 million, I mean, it's just not there. It's just not. It's just not there. So you're not getting the growth. So if you're not getting growth, okay, then why are you paying 25 times earnings? S&P 500, 18 times earnings. Why are you paying 25 times earnings if you're not getting any earnings growth? Ooh. Oh, no, I pressed I hate it when I pressed that. Oh, no, it just blew it up. I don't want to see this. I don't want to see this. Get back. Okay, let's look at sales. Let's say, maybe EPS isn't a thing. Maybe we just look at the revenues, price of sales. Perhaps you could make that argument, right? But why is this price to sales? You'd expect, I mean, I get it, right? Some growth, some inflation of that, I guess, with where the S&P is, right? So you would kind of creep on up with the rest of the broad market, but not this big spike up, and then, no. How about maybe you should be trading 2 times? 2.3 times? Okay? Either way, it ain't where you are right now, my friends. You're a little bit overcooked right now. That seems to be a problem. F12M, is that what I want to do? That's what I always do. And then trailing, trailing 12 months. So that was PE looking out 12 months. Now we're looking in the rear view mirror here 12 months. And you'll see overall it usually kind of tracks with the S&P 500. And this is going back to 08. I mean, this is a long, or 07 even. We're going way back. And all of a sudden, somewhere, they stretched out this valuation to 28 times earnings. This is looking back. Not forward earnings, trailing 12-month earnings. They're at 28, market's at 20. And they're looking at, no growth. on the revenue side, EPS side. Yeah, financial engineering at its best, my friends. Okay. Let's see what the market's done to these guys following the reports. You guys getting the vibe? Are you getting the vibe? Should be getting the vibe. You ought to know the vibe. It's a vibe that it's a growling, snarling, clawing, honey-loving vibe right now. Ted Buck, how you doing? Good afternoon. Welcome. Look at this. Look at this. Holy smokes. This is jumping out. Wild Bill's here too. The gang's all here. Look at the last 2 quarters. 18.6%. And again, guys, this is the 2 days prior to and the 2 days following the earnings report. Okay? The quarter before that, a whopping 34.68%. I prefer to call it the whipping stick. And yes, I think we're going to have to beat this thing just beat it down, slap it down. I don't know. I'm not even going to give you a bull case today. Or a bull trade, rather. We're only going to talk about a bear trade. I think I'm going to start doing that a little bit more, right? I do the bull, I do the bear, I give people options and stuff and just kind of tell you what you want to do. We don't have to do that in every case, right? It's my show, I do what I want. Today what I want is just look at the bearish side of this, because how are you going to justify where the stock is trading? So we've seen that this jump up here they sold that off pretty hard, right? I was involved in this. I got punched in the face on this one, so I hear it. Look what's happened since. So this is the 50-day, guys. The bigger line here. Resistance at the 50-day ahead of the earnings report. That shouldn't come as a surprise, given what we just saw. Lots of volume right here, where we're at currently. Yep. The 200-day is at 31.38. Here's something that these Petmed Express people should be terrified of. You guys know I like my histogram. Well, that got fat now too. You know why I keep moving it? I like my histograms. The volume at price histogram. This is a gap. No. That's not good. That's terror. That's terror in the eyes. There's death. Death is here. Death and destruction and peril and danger. And Petmed Express needs to be careful, because this is the 200-day, and that's where this gap is, where nobody's played before. If this stock's going to want to play down in there, this could be very, very bad. Very bad for the long-term shareholders and bad for the bulls. Okay? We're not going to be bulls, though. I'm going to be bearish on this. And aggressively bearish, my friends. Because this is really the volume point of control in the market here. You can see it, all this volume going out. This is where a lot of the trading's been happening. Calm before the storm. Now, again, maybe there is some sort of bull case, right? But I just can't figure out what it is. It pops and it bumps and it runs, and there's a lot of shorts out there. Here's the thing, guys. Mr. Market at all-time highs, okay? People are looking for excuses. A lot of guys looking for tops, right? They're not finding the tops in the market. They may find tops in individual names, and if this is one of the individual names, they may slash and burn. Who's going to come in here and say, okay, 25 times, that's what we're going to pay for this? Yes, that makes sense. Now, granted, that's not a huge, crazy valuation all the way to the upside if you had some growth, but where's the growth? I don't know. Market's going to be looking forward. I don't know about this, my friends. Okay, so now let's get to the charts, the bar charts. They're not reporting until next week, so we got to push this out to the November expiration. Side by side view, so we can do the math. Trade at 36. We're gonna call this 35. I told you guys, there's not a lot of eyes on this. Which this is wrong. This is wrong. Come on. You know, I know bar chart. There's no way this is 10 cents. Come on, bar chart. Get it together. Let's go. Let's go, bar chart. Give me some good data here. Good data. Good data. There it is. That's good data. All right. That's what I'm talking about. Okay, good. Now, granted, this is a month out, but this is what they're looking for. 340 by 370 on the call, the 35 calls. Call it 355. Looking at the put, 235 by 255. That's 245 all day. $6 holler, perfectly on the 35. They're looking for a big move, man. Wowzers. Options pricing in some juice. Now, the only question you should be really asking yourself, right, is are you comfortable with making $2 on $3 of risk, or do you want to be more aggressive? What do I mean by that? So here's the less aggressive. So I'm going to give you a bear credit and a bear debit. So the bear credit is going to be just selling this 35.40 call spread. Sell the 35 call, you're going to get 355. Simultaneously buying the 40, you're going to pay back 143 for a 212 net credit. Difference in the strike prices is $5 minus that 212. That's 288 you're going to have at risk. So you make 212 on 288, you can make 73% on this. So the bear credit is short. November 17th, 35.40 call spread for a 212 net credit. That's pretty darn good, my friends. 73% you can make on that. And all you would need is Petmed Express to close at or below 35 at expiration out November 17th. Anybody else know where you can make 73% in betting against a bad stock in a month? All right. Now the other way, guys. Long 35. You know, Wild Bill, you got to change your name, man. Can't be Wild Bill. It's got to be Butterfly Bill. I think Butterfly Bill's way better. Just has a certain ring to it. Makes more sense. Butterfly Bill. Now, I don't even know if I like this. Remember, 200 days down here, right? Now that's like 20% off of where we're at today, so it's down there. Maybe that's enough. 35 put would cost you $245. Simultaneously selling the $30 put, you're going to get back 103 of that. So it's $1.42. Difference in the strike prices is still at $5 holler minus that 142 is $358 that you can make on 142. That's right, folks. You make $348 on 142. So you more than triple up on this. That's actually pretty good. That's pretty darn good. Bear debit, long, 35.30 put spread for 142 net debit. Boom. We like this too. If you think it needs more time, time is on your side, my friends. You can go out to December. There's nothing wrong with going out to December. If you're doing the spread, it's even better, right? Because what you're paying for time, you're getting back, okay? The other thing is, for those of you that don't just want to go short a stock or something like that, you can buy these 40 puts. A little bit more expensive. Yeah, 585. But a big chunk of that's intrinsic value. And if the thing really evaporates, could be nice. Or you can just buy these 30s. I mean, this is very aggressive stuff. I think I like this one. Yeah. So there you go. Now, guys, I purposely had to reel in this video because of this whole internet situation I got going on. And Wild Bill, I wish I didn't, because I'd love to go. I'd love to go talk about a few of these other things, other ideas that you have. But I'm gonna have to table that discussion. I can't do it today because just the interwebs, just not gonna let me. I'm already seeing that I'm having I'm slowing. Don't throttle me. Come on, don't throttle me. I would say the lotto is just a 30. That just feels like so far out there, though. I don't even feel comfortable saying that, right? I think the more aggressive play, just buying the 35. Don't even mess with the lotto. There's just not enough strikes for the lotto. Okay? Not enough strikes for lotto. I don't think so. I'm just not comfortable with it. I like the big payoff. Trade the pays. Bear debit. Think tripling up. That's the way to go. That's the potential for it. And what do I see here? I think you have a little bit of a bad report. And you could see this thing down in the mid-20s before long. I mean, look at this sort of intraday space, 200. Yeah, I mean, I think we're good. I think it looks nice how we got it right now. Okay? All right, guys. That's all I can do today. Now, if you're not already signed up on our distribution list, I know all you guys are that are here live, of course. But for you guys watching this later, shoot those emails live, trader@zacks.com. I'll get you on our distribution list. We had a couple 2, 3, 4, 5 people over the last couple of days send me those emails, so I know that's working. So you'll get on the list. You'll know when I'm doing these, and we'll be all good. I'm not going to be able to have a show tomorrow because of this stupidity that I have with this internet. I'm going to try to get a GBU up today. Terrible situation. Hopefully it doesn't take 4 hours to upload a GBU, and then and we'll go from there. All right. So that's all I got for you guys here today. We'll talk about other things later. My interwebs here is cutting me down, and I got to get out of here and take care of some other stuff. So I promise I will fulfill promises in the future. It looks promising. All right, guys. Thanks so much for hanging out with me here today on this truncated, not too truncated, we're still here for 33 minutes version of Zach's Live Trader. I'll see you guys in the chat because I can always do that even with a throttled internet, and we'll go from there. So thanks a lot for your participation as always, and I'll see you folks later. Thanks.